I ain't talking about no broke business. I got money now. All I really understand is since that check came in, everybody talking like I'm really acting funny now.
Yo, it's your boy Quick, and I'm back like I never left. Before we get into the video, don't forget to like, comment, and subscribe for more. So if you watched anything on the stock market recently, whether it be on TikTok, whether it be on YouTube, anywhere on the internet, or just watching like CNN TV, you've heard this word bubble recently. Heard it a lot. So I'm going to give you a couple of my reasons on why I think that we could be facing a possible bubble. So first things first, bond yields are on the rise. A lot of experts are saying that bond yields could hit upwards of 2% here soon. This is significant because they could take a lot of money from the stock market and put it into the bond market, right? So when you're taking money out of the stock market, prices are going to come down because you're applying selling pressure on these stocks. They're less desirable, and there's less demand for them. While you're putting all that money into bonds because you know that it's safer. Like I could have put, not that I could have put 50,000, but if you had 50,000 to invest in Tesla in the March lows of 2020, yes, you could have gotten almost 1,000% return up until January highs of 2021, but that's not normal. Stocks don't normally go up 1,000% in that short amount of time. That's not even a full year. So why would I be risky with my $50,000 investment if that's all I had to invest? I'm going to put it somewhere where I know it'll be safe, and if I do take a loss on the year, it's no problem for me to try to get it back in that next year or the following year after that. The next thing I would think would be investor speculation on inflation. We've had a lot of money, printed in the last year and a half from all these packages. They say about 22% of all money that's in circulation today was again printed, and I say printed because a lot of it was just deposited directly into your account. But they say about 22% of all money in circulation was printed within the last year and a half with all these packages. That's a lot of money. So in the short term, yes, it could be good for us, but in the long term, I'm not sure, what implications we could be facing from inflation or anything else. Just look at this information from the Federal Reserve Bank of St. Louis. Each of these gray areas represent recessions, but I'll really only talk about the three that I've lived through. So this would be the dot-com bubble, the 2008 housing crash, and then today. If we look here, this is the dot-com bubble. Money went up after that recession. Then we get to like the 2008 to 2010 housing crash. Okay, money supply went up. It kept growing. Then we get to today's time, 2020, and it goes up pretty much in a straight line. I mean, you can't really get more vertical than this. So again, we have to wait to see what kind of implications we could be facing from that. We still are within this gray period. We're still within this recession, but money is being thrown out there in large amounts. So as you can see with your own eyes, that like visual representation of the money supply, inflation has to be around the corner for us. I don't know when. I don't have a crystal ball. I don't have those answers. It may never come. Hopefully it doesn't. But I think that if it does come, it'll be much greater than the normal 2 to 3% that we see a year anyways. And the next thing that I think is really putting a lot of selling pressure on the stock market is taxes. We're now past that like March 16th to March 18th year mark where your short-term capital gains tax moves to a long-term capital gains tax, and you're no longer taxed at your ordinary tax rate. You're taxed anywhere between 0, 15, and 20%. And this is huge, right? Because I think selling really only begets more selling. People start to see that, I'm starting to lose profits. I'm going to sell out. I'm no longer taxed at my ordinary tax rate, which could be, up to 37%. I'm somewhere falling along, 0, 15, or 20. I have a lot of profits. Let me go ahead and secure my profits, because anything that is just sitting in your, Fidelity, Webull, whatever brokerage account you have, as long as you still have equity in whatever you're holding, it's unrealized. You close it, it's not realized profit. A lot of people are going to realize their profits and pay less taxes. And I think another thing too that kind of piggybacks off of realizing those profits, where we're at the peak. Again, this goes back to the whole bubble thing. once it pops, people are like, oh, let me sell out at this top, let the bubble pop, let me buy back in at the dip, and ride this train all over again. So I think that's a lot of what's going on. But I think it's time for me to close this out here because I could talk about this all day. Like I say at the end of all my videos, I'm not telling you it's going to be easy. I'm telling you it's going to be worth it. Thank you.